Welcome to the Lunchtime Debate here at FinTech Talent's Virtual Spring. We have a great discussion for you today centered around a single question. Is innovation impossible at incumbent banks? Joining us today in this discussion are Alex Bannister, the Director of Strategic Partnering at Nationwide, Christian Hall, who's the Principal Digital Lead at BNY Mellon, Elliot Lim, Chief Commercial Officer at Mambu, Rita Martins, Digital Transformation Manager at HSBC, and Rashan Hirtagi, Senior Innovation Lead of AI at NatWest. Now, having led an innovation team for Banco Santander in the United States and helping stand up their corporate venture capital function at Santander InnoVentures, and now working to connect banks and startups as the co-founder of Unconventional Ventures, I know the struggle for innovation is real. But is it impossible? It is surely necessary, now more than ever. Innovation, the new ideas that we drive, the new business models, this is what financial services must do in order to strive to meet the needs of every people, every community, all the people that we're possibly able to serve. So with that, we're going to just dive into this conversation. We're going to start with Rita Martins. Rita, what say you? Is innovation with a bank impossible, or is it possible?
Hi, I'm Rita Martins, and I drive digital transformation and innovation at HSBC. I do think innovation is possible as incumbents. It might be different than the one we typically see in fintechs and startups, but it is definitely possible. So typically we have two forms of innovation. We'll have the internal innovation, in which we'll have teams, innovation teams that are part of the incumbent, or we also have teams which are set up as a startup and they're working on a specific project and problem. We also have the external innovation, which will be partnerships with fintechs, or in some cases, mergers and acquisitions. To bring this to life, my team has brought some innovation pilots recently. So we started by identifying the problems that we wanted to solve, and we went into the market to identify fintechs that we wanted to partner with. And by market, I mean external market, but also internal market. So identifying fintechs that were already working with other departments internally, being in the UK or outside UK. And it's really important for an incumbent to do that housework, because if a fintech is already working internally, it speeds up the engagement and the onboarding. And at the same time, they already understand our processes and data. So after we have spoken with a few different fintechs, we have identified 3 that we wanted to bring into the house. We brought them in, we tested their tools with our data and our processes. And some of them were really relevant, and we're speaking with them to partner in the future. For the ones that were not relevant, we also give a big lesson learned, because now we know what we need to look for next time we are looking to partner with fintechs to solve the same problem. It is not easy. It is not easy to make innovation at incumbents because of the legacy systems, because of the scale that the company has. But I think during the last innovation pilots, there are 5 key factors that really believe will support innovation to be successful at incumbents. So the first one is sponsorship, having leaders that really sponsor and really support digital and innovation. The second one will be budget, so having budgets allocated to experiments, to trials. The third one will be operating model. So things like sandbox are really important, because it really enables us to try and test new ideas with our own data and our own processes. The fourth one is also having a mix of a team. So having not just technology experts, but also bringing the finance SMEs experts into those experiments. Finance SMEs have been in the industry for many, many years, and they really understand our processes, the products. They speak with the customers regularly, and they really understand also the regulation and what is possible and what is not possible. Lastly, I think it's really important that we also have innovation strategy and that we share that internally. So one of the things that we found out when we started the pilots was that actually there was already so much innovation happening internally, and that's amazing. But we also need to make sure that we communicate and we share as an ongoing basis what is working and what is not working. So as an incumbent, you have a joint up innovation strategy.
So next up, let's listen to Alex Bannister, the Director of Strategic Partnering at Nationwide.
Hi, I'm Alex Bannister, and I lead the innovation and partnering teams within Nationwide, which is the biggest building society in the UK, and as you know, an incumbent mortgage and savings provider. I'm a relative newcomer to the area in the sense of leading a team dedicated to driving innovation and leading our venturing activities. We have invested in about 9 startup businesses, and we have a fund of £50 million that we dedicate to investing in them. And we've also supported an Open Banking for Good programme for around £3 million fund over the last period of time. And really, that activity and venturing sits alongside our desire to try and drive some innovation into an incumbent organisation like Nationwide. So, of course, we invest a lot in our future capabilities, and the majority of that is aimed at making our core technology more efficient. But really, my team's job and myself are here to try and bring an external perspective to bear and to try and work with some of those partners we've ventured with and others to solve real challenges for our members in a way that doesn't rely on that kind of traditional major change program. So unsurprisingly, given that I'm relatively new to the role, you'd be amazed if I was going to be completely negative about the prospect of driving transformation. But I do come from a business background, and you know, I've all the scars of sponsoring change into in the traditional way into an incumbent, whether that be waterfall, slow moving, complex architecturally, hard to align delivery and testing, with all the rest of the change that's going on. And at the heart of it all, the reality is that it's just hard knitting together new and old tech without taking risks. So, for example, I spent a couple of years sponsoring an AI-driven money management tool, which was pretty innovative in its time, but it was really hard to integrate and make scalable into the core of the business. So I think if the exam question was, are incumbent FS players going to organically grow out from their core in an innovative way, I think that sounds relatively far-fetched. However, I'm much more optimistic around our ability to find lighter touch ways of utilising the strengths of incumbents, which is their brand, and our data to deliver interesting propositions and work with partners to build services that our customers want. So obviously there's some watch outs. If you can't get your customers to interact with these services in a seamless way, then they won't jump through hoops to engage with you. However, well, and also I guess culturally there's a risk and resilience appetite that needs managing, which isn't always aligned with more agile entities. But my summary would be that I'm a realist who believes there is a way to enable transformation of customer experience and to unlock the mutual benefits of trusted brands like ourselves working with new, more agile technology players. Inevitably, this will have to start in areas which are more lightly integrated. But for the time being, I'm the newbie optimist who hopes that and believes that innovation can be done in incumbents with the help of partners and new ways of doing things.
So now I want to introduce again Christian Hull, Principal Digital Lead at BNY Mellon.
Okay, I'm Christian Hull, Digital Lead at BNY Mellon. BNY Mellon is a very large bank, but an entirely institutional bank. We don't do any retail business, which does make us a little bit different. The question is innovation possible in incumbent banks? Well, yes, and yes again. Incumbent banks innovate all the time. However, innovation at enterprise scale is hard. BNY Mellon, we created a digital department that reports straight into the executive committee, not into any other line of business. And that makes a huge difference. Our digital department supports the lines of businesses by providing leadership and specialist skills to lean on. For example, we have dedicated teams that provide partnership support with the ecosystem. They provide connecting us with fintechs when we need them. I have another team that provides advanced technology support, and a big team of data scientists who help everyone get value from their data. This, combined with a passionate focus on our clients, means that we're able to power innovation all the time. A recent innovation we're very proud of is our data and analytics solutions product. Here we've created a secure cloud-native product that hosts our data and allows clients to host theirs too. We combine this with a data analytics studio for analysts, and finally leverage this powerful dynamic data set to quickly build whole new products. The Vault is designed for quick ingestion of data and easy data management. The Data Studio has lots of tools to query, analyze, and visualize data, plus powerful AI and machine learning capabilities to create descriptive and predictive analytics. Really, the proof of all that is, proof of the whole concept is really in the applications that we build on it. For example, in partnerships with vendors like Aria and others, we've built an ESG app that creates a trusted source of company ESG data that's crowd validated to remove the ambiguity that currently exists and is holding back the growth of the ESG investment sector. Innovations like that are the kind of innovations that only massive incumbent banks like BNY Mellon can do, because you need the scale that we've got. Also, we have other unique selling points around the amount of data we've got. We clear a disgusting $1.6 trillion a day. 1 in 5 transactions in the world goes through our pipes. We see the world's financial markets breathing. That's something which we're learning to use and use to drive innovation. Now, what's important to recognise is that this is done in partnership with the fintech ecosystem. We can't do everything ourselves. That's the way that big banks used to work, and it's not very smart. So we try to do so slows us down, which is the problem. When aware fintechs offer a solution that means we can improve our services to our clients, we're always very keen to do business. However, our approach is normally to seek out vendors rather than to invite pitches from tens of thousands of startups that dream of landing the next whale. Basically, we're busy and we can only spend the time where we see value, and that's probably where the myth that innovation is impossible that incumbent banks comes from. I'll stop there.
So next, let's hear from Elliot Lim, Chief Commercial Officer at Mambu.
Okay, so is innovation impossible in incumbent banks? I don't think it's only possible, I think it's critical. I think if you innovate to change, if you don't change, you don't innovate, then you basically die as a business. The incumbents did struggle for a long time. I've been 20 years in the industry, so I've worked for 3 or 4 large banks. I've worked as a consultant, I've worked in fintech, so bringing a pretty rounded view of the industry, I think. At one point, I was responsible for innovation labs for a major bank, and I almost jokingly look back now and say I was probably a fintech assassin. Banks looked at doing different things on innovation. They were bringing very smart kids, get the innovation in there, then trying to turn them into bankers, which didn't work. The next thing that happened was they tried to buy into the companies. They would invest, again, detaching themselves from the wider market, therefore dictating the roadmap, sort of killing the innovation on the way. And the third one was actually even worse, which was come and do a POC for me, potentially unpaid or for a very long period of time, therefore removing all of your funding and trying to dry out innovation that way. I think they've learned a lot of lessons. And one of the main lessons is that they can't really be bank-centric with innovation. The innovation can't just be about what's best for the bank. It has to be an aligned strategy through the entire ecosystem and making sure that that ecosystem has share-valued outcomes as well. So yes, they can drive innovation. They've got to innovate in the business, innovate in the thinking, and innovate in the mindset. Roshan mentioned culture. Culture is fundamental to the way things have to change. And that's not just about organizational culture, it's cross-organizational culture. Making sure we build the ecosystems that are really going to drive innovation globally to get real value. At Mambu, we very much preach around building ecosystems, composable banking, building for an unknown future. One thing I'm definitely seeing important at the moment is that all of our customers and the market in general, during the corona piece, has really made people speed up their thinking for not what will happen if we get to an unknown future, but what will happen when we have an unknown future. And that is really fundamental. We're seeing sort of what you would call the neobanks, the smaller banks, so N26, Oak North, some of the relatively smart players, some of our smaller players are certainly gone on that journey to drive innovation. But we look at our other customers, people like Santander, people like ABN AMRO, really doing spin-offs for innovation, doing speedboats really to try and prove things, to try and drive what will the future of banking be. And I think this is one of the main reasons we have to innovate in all types of banks, all types of financial institutions. There is no one size fits all. We don't know what's going to happen in banking. We don't know what's going to happen in the world. Is there going to be a commoditized banking, a return to relationship banking? Nobody knows. And I think what's really happened as we move through innovation is as I said, the mindset and the culture is it's not just about business understanding technology and technology understanding business. It's that holistic approach to how to innovate in the wider ecosystem, build for an unknown banking future, and really understand that what was perceived as a mitigation of technology risk actually now is a real perception and a reality of business risk. The business risk of doing nothing is driving innovation, making sure we have to really change the way we see these things. And if the banks get it right, the incumbent banks, you could almost argue that they may be better placed to drive innovation than the neos, but they sort of have to forget everything they've ever known. They have more knowledge, they have more cash, they have more experience, but they have to really change fundamentally. And to really take that, as I said, to drive across the ecosystem, to learn from each other, not be bank-centric, to be ecosystem and customer-centric, not just drive innovation for the sake of innovation, not just look at how to reduce risk, reduce cost, and increase revenue, but to give better banking for everyone. And that certainly is why I think it's not just important they drive innovation in the incumbent and neobanks, but as a wider market, we need to think about innovation very differently.
Let's hear from Rashan Ratagi, Senior Innovation Lead for AI at NatWest.
I'm a senior member of the NatWest Innovations and Solutions team. My role is to focus predominantly on the search and qualification of AI and machine learning solutions that have potential for bank-wide implementation. I also initiate and I'm part of key strategic projects funded and sponsored by the C-suite. So for example, last year I was involved in our agent-based modeling program of work. So that was a next generation complex analytics platform using agent-based modeling and deep learning to essentially predict the future, simple, like the Matrix basically. I'm also responsible for developing and cultivating partnerships, big and small, so with the blue chips and also, and I've picked up a lot of experience in entrepreneurship. So post MBA, I've run startups in the UK, and I've brought that kind of experience to the innovation team. And being an ex-capital markets bond trader, I focus purely on execution and delivery. I don't really focus on, the POC thing. It's more about actually what can we put in front of the customer. Not because I work at NatWest, but is innovation possible in a big bank? I would say yes, it is, because we've done it. It's hard, but it's very possible. I think that innovation and strategy teams are very important in organizations such as ours, because we have to ensure that there is a sufficient level of agitation across the firm. We have to continually question our practices and ways of doing things, and we have to call out advances in technology. We have to explore evolution at the product level, and we have to start thinking about changing and dynamic business models. What is innovation? I mean, innovation is really about delivering value to the customer expectation. And I think as an organization, that is purpose-led, with governance, etc. We have to be cognizant of the fact that we need to constantly update, we need to evolve, we need to deliver value, better serve our customers, the society, and surrounding environment. I won't lie, there are challenges, and it's very difficult. I mean, there are challenges, especially today, with business teams working around the clock to help support our personal and business customers. The lessons that we learn continue to reinforce the importance, though, however, of using methods and approaches that help us deliver the right support at the right time. And I would say that a good innovation team is as much about capability and skill as it is about psychology and approach. I mean, we have been kind of given the mandate to deliver. We focus on delivery, things that move things that move the dial. We do support BAU. We do look at incremental innovation, but at the same time, we're focusing to deliver impactful solutions and partnerships which really deliver value. Culture. The question of culture always comes up. I mean, do we have a supportive culture? And people argue yes or no. I think that we do. I mean, if we had a culture of reticence, then why would you have innovation teams in the first place? Because they would just be distractful, especially in times like now. But we're given the mandate to do things. I will say, there is a commitment in NatWest to evaluate things, to stay connected to advancements across business and technology, and importantly, evolve and improve. I mean, evidence of projects, just very quickly, distributed ledger technology, working with R3, we've led in a lot of programs of work. We do a huge amount of work which is public and quantum. And then last year, the project which we announced publicly at Microsoft Decoded which was the agent-based modeling, program of work using complex analytics and deep learning to predict the future. So to look at, all those what ifs, Monte Carlos, etc. And a lot of these projects involve multiple disciplinary teams, large industry partners. So I think that banks can innovate, they can do it, and there is a will to do it. And I'd say, as a wise person once said, we choose to do innovation not because it is easy, but because it is hard. And I'll say again, for me being in the team as an ex, I don't focus on doing things because they're fun. I focus on doing this because you have impact. So again, our focus on delivery, and I think, we do as good a job as we possibly can.
Rita, I wanted to ask you this because HSBC is a really interesting international bank with a great history. When you think about innovation and this question about whether it's possible, is the opportunity for innovation really geographic specific? I mean, what works for HSBC in Europe may not work in the US, it may not work in Asia, it may work here, it may work there. How do you approach innovation in such a large international bank?
So it does really depend. So sometimes, yes, the opportunity to innovate is geographic specific, but other times the problem that you're trying to solve or even the customer needs can be applicable to more than one region. I think the main thing is that you cannot just lift and shift your solution. You need to take into account the differences between the regions. And by differences, I mean the culture. Does the culture in the new region accept what you're even bringing as a solution? Is the customer ready? Does the customer even need the innovation that you're bringing on? Regarding regulation, does regulation allows in the new region to bring the solution? Can you share data, for example? And also really important, the banking infrastructure. Do you have the right banking infrastructure in the new regions to be able to bring the innovation that you're thinking? I think lastly, and also because thinking of HSBC as a global organization, we also always think about the company processes and systems. Because we are so big and we are global, our processes and systems are not the same sometimes between different regions and even systems. For one reason or another, the system in the UK might be a different version than the one we have in the US, and that might mean that we need to create an innovation in the US that, for example, in the UK we don't need, just because we have a more updated version from the system. I think sometimes the opportunity starts geographically, and then it will become a multi-region opportunity. And I think that's where we're going more and more as regulation starts opening up in the different regions, as the infrastructure starts to coming up, and even as the regulators really starting to have a conversation. So, for example, Singapore nowadays, they're really driving innovation. So to be honest, the short answer, it is really depends, but whatever you think about innovation, do think about the differences that you have in the different regions, and that's how you can make sure that it will work. I was also thinking that I think one of the good things that we have in HSBC is that we are not just a global corporation, we also have global teams. So my team, I work with people from Poland, from Hong Kong, from Singapore, from India. So when we do look into innovations that will apply to more than one region, we'll bring those colleagues into the conversation. So we make sure that at its core, the solution that we're bringing in will not clash with any of the difference that we have in the different regions.
No, it makes perfect sense. And when we think about, what's been happening the last couple of months around the globe and having all of us be working from home, I would say that this has been the time for collaborative innovation within banks. So thank you so much for your thoughts, Rita. Appreciate it.
Thank you.
Let's go to Elliot. All right, and then we're live. Thanks for coming in, Elliot. Let me just pause for a sec. Let them break it. All right. So Elliot, you say at Mambu that banks used to be built to last. I see that on your webpage, and now they need to be built to change. Are there banks you would look at that really get that are really looking at the future the way that you do at Mambu? I mean, how do you work with incumbents and technology providers to improve the state of banking? Like, how do you look at this space?
I think you look at it with, we spoke about innovation, so there's an innovation lens and a way they're driving. I mean, I don't think there's any difference now between built to change and built to last. I think what they have to do is build to be agile. The biggest challenge is no longer the technical challenge. It's the acceptance of the mindset that we're in a new era. You have regulations changing around the world. There are payment holidays being given for loans, different formats of banking, different ways of working. We're allowing our customers to implement those in a matter of hours or days rather than weeks and months. And that sort of shows the mindset switch to that agility. A lot are getting it. Actually, there's an increase in getting it. I think not just because of COVID. I think that's speeded things up significantly. But you do see at every level that everybody is getting the model. Everybody's understanding that change is inevitable and agility is vitally important. It varies by size of bank, by institution, by segmentation, and also by geography. But all in all, I think I mentioned some of them already. That the N26s, Oak Norths of the world certainly are built this way to try and drive innovation. But most of the bigger banks, the ones we work with, again, the Santanders, launching Asto and a few others, you've got ABN, New 10. We're seeing increasingly that those guys are really getting it. And the most important or most interesting piece for me of your question is how do you get the incumbents and the tech vendors to work together? Because they're not naturally tech-centric, even though they may say they are. They don't have that centricity of building something that's not bank-centric. And what I mean by that is that you have that very much driven, here is why we're doing something. It's either to reduce risk, reduce costs, increase revenue, or increase customer experience. But building an ecosystem around collaboration and what we call composable banking really means that you've got to take everybody, has to be give and take. New World Order means it can't just be bank-centric. Everybody has to have that fair share of wallet in that aligned strategy. But also the vendor also has to accept that if a bank is going to change, they can't insist on 10-year tie-ins. They can't be a vendor tie-in. This is all about building a business model that then has best-in-case technology for today and also allows you to then pivot, change that for tomorrow. For me, that's absolutely fundamental of how the incumbents get to work with the tech vendors and how we build banks that are there to last. And honestly, the bottom line for us, it's not about last, it's not about innovation, it's not about anything. It's about building better banking experiences for everybody. The bank, the regulator, the end customer, the tech vendor, and everybody has to align to that.
Absolutely, I can't agree more. So thank you so much for sharing your views, and look forward to seeing what you guys build next.
Thank you.
So we are going to go to Alex.
Here we are.
Alex, how are you? Thank you. All right, so let's just jump in. Level set. All right. So Alex, how will the current pandemic impact your ability to truly innovate? We talked about it a little bit, but the business models of neobanks and fintechs, and there's a lot of stress right now in the space. So how are these going to be sort of more challenged, and how can you sort of respin innovation after the last couple of months and what we've learned?
Yeah, it's a great question, Bradley. In some ways, it could be a blessing or a curse. I mean, obviously, the pandemic is a curse in its general form, but potentially it means that we can overcome some of the resistance to utilizing other people's solutions, as the need to become more agile and efficient is ever more important. Equally, the challenge is always in organizations like ourselves. We're quite good in a crisis at building tactical solutions in our core business. And so that gives the impression of innovation happening at a faster pace. But the reality is it's not sustainable. So I think the challenge, certainly for us to make sure that we can be truly innovative, is continuing to work with some of our partners to solve problems that, that don't need to be heavily integrated. So we're working hard with a couple of partners. One is Toucan and another one OpenWorks, who are startups, to help try and improve customer experience, which is vital in this period of time, and trying to sort out jobs to be done for some of our members. It helps if those use cases are quite specific and don't require lots of heavy lifting internally. So sometimes you can have a really specific use case that does a job where your members will be happy to go, for example, to a separate app or a separate way of engaging. So that helps. I think your other point around the pressures on business models, I think there are two big ones that we're already building, but this will catalyze. First one is the ability to monetize the kind of neobanks. You know, they've got lots of traction in gaining customers, and I guess they were already under pressure to start to produce value, and I think this will only accelerate that. The other one is obviously what the credit cycle and the economic impacts do to those of them who had balance sheets and wanted to lend, as this is the first kind of big up and downturn they'll have been through. I think both of those factors will put challenges on capital, either from a funding or from a profitability point of view. We shall see, and it may be that pressure on those new players will mean collaboration, and a more business-to-business model may well be their pivot out of that particular challenge. But who knows?
Yeah, totally agree. I think that there are going to be new business models evolving just from this, like it was out of the Great Recession. So it's going to be a very, very interesting decade with the continued flow into fintech startups as well. So thank you so much, Alex, for sharing your views. Next, we got Christian coming in. Hello, Christian. So going on this theme a little bit, pandemic or not, as banks have shifted to sort of this more remote work the last few months, and I remember, in different banks, the type of security that you need to get into just to get into systems, let alone ever working remote. Is this going to help or hurt, innovation projects at your bank or in banking in general? Do you think this is going to simply lead to more partnerships?
Yeah, I think remote working is here to stay. I mean, it's my colleagues will laugh because I'm famous at BNY Mellon for championing work from home. But so I might be slightly biased here. However, I work in a global bank, and like Rita was saying earlier, the reality of big banks like us is, every day I'm talking to people on different continents. What difference does it make where I'm sat? It makes no difference at all. So it's been part of our MO for a long time. I think what's really changed is, there were kind of early adopters, people like me and many others who just kind of went, yep, that's a sensible way to work and it's fine. But there are a heck of a lot of other people who are like, nope, I have an office, I wear a tie, blah, 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 blah. And, a lot of those people were the decision makers, and that's changed. They've now woken up, they've realized that, and it was hard. For a lot of them, I've spent a lot of time talking to a lot of senior people, telling them very basic steps of how they could be more effective. But now they've got over the hump. They're like, the curtains are lifted, and they're now very aware that they can have impactful, important meetings remotely, and they can sell products remotely, and they can talk to important people remotely. And yeah, okay, at the moment we've all got to get out of jail card, so we're allowed to do these things. But the point is, they like it. They can have that meeting that, we were going to jump on a plane and we had to schedule all those people. They had to block enough time to get on planes and get to hotels and get to offices and do all that stuff. Now I've only got to find a 2-hour window. It's a game changer. It's suddenly we can innovate. So short-term stuff, yeah, there's a lot of change, and it's kind of, it's all the fireworks in front of your eyes. But I think there is a bigger long-term picture. We had a talk the other day, and the conclusion was that we're not going back to the old normal. We're going to, we'll go back to a new normal, and this is one of the things which will be part of the new normal. The acceptance of remote working. I think when you wind it forwards, though, and you look at what we can do with collaboration tools, it opens up lots of possibilities. We're no longer stuck with teams that have to be in the the surrounding area of New York, London, Singapore, Hong Kong. Great. There's some awesome people there. I know a load of them. I'm sure you do.
Yes.
But who's to say there aren't some great people in Moscow? Who's to say there aren't some great people in Aberdeen? I don't have an office there, but that my next talent might be sitting in Aberdeen and actually like living in Aberdeen. And who's to say they're wrong? We've got to be open to this stuff, and now I think we can. And I think one of the other big pools of talent that that is massively underutilized are the people with physical disabilities who getting commuting was never been an option for them. There's amazingly talented people out there, and we're now getting to a stage where people are kind of going, actually, there's a cultural change and there's a technological shift. The two things are now, I think, been shunted forward 3 to 5 years by the COVID crisis, and suddenly everyone's like, oh yeah, this works. And being in a big bank, we're going to look at money and go, hey, we could save money. We don't have to have so many seats. It's all good.
Yeah, and imagine what you could do with all the money that you're not spending sending your executives and other folks around the world just for that 2-hour meeting. I think it'll be interesting to see when banks list the cities that they have offices in, are they going to put Aberdeen and other things now in the future? We'll have people everywhere in the world, just like we should, just how startups do. So thank you so much, Christian, for being with us today and sharing your views. Next up, we have Roshan.
Hi.
Thank you for your patience. And is it
okay.
Roshan or Roshan?
Roshan.
Roshan. Okay, very good. All right. So Roshan, part of driving innovation in a large bank is recruiting people capable of changing that culture. Efforts at NatWest, like this recent Dream Bigger initiative, which is really geared toward, I think it was 16 to 18-year-olds sort of learning about innovation and coding and these type of things, brand new initiative and things like that, to incubate ideas and to get young people more involved in kind of what you're doing. How do you look at change within NatWest itself? How do you look at the importance of building teams? And just, what's your thoughts on the future and how that's going to change?
I think, programs like Dream Bigger are important. They're there to kind of encourage and educate people in terms of, what programs of work exist and what are in flight, as well as, I suppose, kind of, encourage people for transformation and innovation. And if you look at like large organizations like NatWest and all the firms that the panel work on, a lot of this stuff can be a little bit invisible, or it can be lost, behind a lot of the detail which goes on during the day. And I think, having these programs also helps to build confidence and inspire people, and it also drives, thought leadership, and that kind of rubs off both, internally as well as externally. And the amount of times, though, that I hear about people talking about innovation programs and who's in the innovation team and what are they up to, and they want to get involved in it, but they just do not have the access to, the team of the projects. It happens quite a lot. So I think it's very important to have these kind of programs of work, if you like, and these kind of, I suppose, projects that go on. But I think, moving forward, when you look at the way kind of the world is right now, the innovation space is really important. But I will say, the caveat though right now is there still is, that kind of cultural inhibition. There is still that degree of risk aversion or comfort, and people talk about, inertia. I hate using the terms of, corporate antibody, but I don't believe people are resistant to change, but I do believe people are relatively cautious. All those people that are kind of, these legacy people that work in organizations, including myself. But I do understand that, it's times like today that you really do need to kind of, focus, in the here and now, but it's also, times like today that you have to kind of accentuate the need to change, front to back, whether that's your digital journeys, whether it's security, whether it's, the remote working technologies that, we've covered off in the panel, and machine learning and all the rest. But I think that, given the environments that we're in, that we have to do things with degrees of safety, and we have to be kind of, there is, accountability, which is totally understandable. We have to incentivize people to change. So that's the one thing, Bradley. If you look at, the way the world is right now, the businesses and the SMEs, they are literally kind of, back against the wall. They're servicing the clients, their corporate and our personal customers. And kind of the reality is that, they need, hour and hour, they're working for them. To try to engage a lot of these teams in innovation, it's pretty difficult right now to get the bandwidth, to get the time. In terms of capital, in terms of proposing new kind of, ideas and initiatives. I think that, incentivization involving people in projects is very important, but I think that, they need to be allowed the bandwidth. A lot of the teams need to be allowed the bandwidth to be able to contribute and get involved in these things, and they have to be recognized, I suppose at the end of the year in terms of like, the reward, the remuneration side of things. But I think that, teams will definitely augment. I think from my own personal perspective, you need to hire people who come in from startups. You need to hire people who come in from different industries. You need that sort of fresh injection. I wouldn't say vitality, but you need a fresh perspective. One thing I will say working with startups is you get a lot of very smart people who do a lot of very smart things, but then the problem is that some of them don't have much experience in finance. But then you get a lot of finance people who are very, very smart, but don't have the kind of the experience in startup or doing new ventures. So there is that kind of dichotomy, but it's having that happy medium or that balance. So I think, what's the perfect corporate structure? I mean, you'll probably see a lot more hiring of people with STEM backgrounds, the science and technology, the engineering, the maths backgrounds, as we migrate to kind of, smarter methodologies and all the rest. But you still need the entrepreneurial touch, though. I mean, at the end of the day, if you're going to be purpose-led and you're really going to be, customer-centric and environmental friendly and all the rest, I mean, you need people who have experience in entrepreneurship. You need people who want to drive change and transformation. And I think that, as I say again, bringing in people from different industries, bringing in people from the startup community is going to be, what's important going forward, if that makes sense.
Yeah, absolutely, Roshan. We appreciate your views, and I think, if anything, the industry will continue to be able to address more diverse needs based on the way that they're hiring and bringing folks in. So we appreciate your views today. What you heard today was mostly a tale of optimism from those working within financial services that innovation is indeed possible. While the amount of time it may take to innovate within a bank may be very, very different than a startup, which is focused primarily on one business or one consumer problem within the space, iterating products or services within a bank takes a special kind of magic, a unique set of skills, and much fortitude. But working together, we can push each other forward, work to serve the ever more changing needs of the people in our communities. This way, we could create an industry that is better for all. Please join us in the post-debate spin room where you could chime in with all of us. Let us know your thoughts. How do you feel about this question? Is innovation possible, or is it impossible? So with that, I would like to thank all of our speakers today and wish you a good afternoon as you attend more of our sessions here at FinTech Talent's Virtual Spring.